Internal Revenue Service IRS Tax News. IRS resources help taxpayers determine if an offer in compromise is the right way to resolve the tax debt. But first, an attempt at a joke. I apologize in advance. I'm proud to pay taxes in the United States, but I could be just as proud for half the cost. In fact, I would be more proud if they did twice as much at half the cost, something well within reach, paying for things that are actually useful, things like, for example, a trapdoor under the congressional speaker podium that is triggered every time an outrageous lie is uttered. Lies such as, spending multiple trillions of dollars will actually lower the deficit and reduce inflation. Leaving the entire population slack-jawed asking, how stupid do you think we are? Somebody engaged the outrageous liar, pants on fire, congressional speaker trapdoor on this guy. Sending the speaker down a series of shafts terminating in a large container of water designed to put out the fire in the pants of the liar. Honestly, these people must spend a fortune on pants due to their spontaneous combustion. Estimators have estimated that a 10% reduction in congressional lies would result in cutting the national deficit in half over the next 5 years due to decreased congressional wardrobe costs caused by liar-related pant fires. We can't afford not to build the outrageous liar, pants on fire congressional speaker trapdoor. IRS Tax Tip 2021-172, November 22nd, 2021. Individual taxpayers and business owners can use the IRS's Offer in Compromise booklet. There's a link to that here, or the new how-to video series, link to that here, to learn how an offer in compromise works and decide if it could help them resolve their tax debt. Taxpayers can use pre-qualifier tool, there's a link to that here, see if they are eligible for an offer in compromise. An offer in compromise is an engagement between a taxpayer and the IRS that settles a tax debt for less than the full amount owed. An offer in compromise is an option when a taxpayer can't pay their full tax liability. It is also an option when paying the entire tax bill could cause the taxpayer a financial hardship. The goal is a compromise that suits the best interest of both the taxpayer and agency. Quick recap on the offer in compromise. Note that the IRS addresses the offer in compromise in this way oftentimes because they want to provide information so that taxpayers, the individual taxpayers, have the direct resources to the information. Note that the offer in compromise is one of those things you might see advertisements saying something like, if your tax debt is over 10 or 20,000 or something like that, we might be able to lower the tax debt, and the thing they're typically referring to would be the offer in compromise oftentimes. But you got to be careful when you're looking for services or help with regards to setting up an offer in compromise or managing the tax debt if your debt is over a certain dollar amount, because when you're looking at advertisements, some of those advertisements might just be advertising companies that are basically lead generations, so you might not actually know who you're dealing with from those advertisement companies, because then they're going to go to another firm, which could be good or could be bad. But it would be better if you're looking for help with an offer in compromise to, one, educate yourself on what the offer in compromise is. There's plenty of resources on the IRS to do that. And then two, see if you can get access to a firm to have help with from someone you trust, like a CPA or something like that, so that you have a direct reference to the actual firm in that way, rather than responding to possibly an advertisement, which is more likely to be kind of like a lead generation where you don't really know exactly what the end result or quality of the end result will be. So one more recap on the offer in compromise here. Let's read through it again. An offer in compromise is an agreement between a taxpayer and the IRS that settles a tax debt for less than the full amount owed. So you might say, okay, well, why in the world would the IRS do that? So possibly you have a fairly large tax debt in that situation if you're thinking about an offer in compromise, and you're saying, I would like the IRS to lower it in some case. Now, again, why would the IRS lower the tax debt? Because they're going to be thinking on their side that you owe the taxes. It would be a disincentive if they were just to say, well, it's not because you know them or there's some kind of special relationship or something like that. There's going to be a reason. It's kind of like a debtor relationship to the loaner and the debtor, which is going to be that you don't have the capacity to pay the debt, most likely, and therefore it's mutually beneficial for the person that you owe money to lower the debt to a situation where you could actually have a sustainable possibility of paying it. That's the general idea. So an offer in compromise is an option when a taxpayer can't pay their full tax liability. Notice it says when they can't pay the full tax liability. So that means, if you could, even in the future, what would be the solution? The IRS would say, we'll set up an installment agreement, and we'll treat it just like a loan. We'll charge you interest, and you can pay it over an extended period of time. But if you're in the situation where you're saying even an installment agreement will result in a situation where you know there's no way you're going to get this much money given my financial conditions at this point in time, that's kind of the basis of the argument that you'd be given in an offer in compromise. So it is also an option when paying the entire tax bill would cause the taxpayer financial hardship. So now you've got this condition of financial hardship. So financial hardship obviously sounds like it means that there's financial problems being it's difficult to meet the current bill's situation, right? So again, you're kind of saying to the IRS, I don't think you're not going to get your money because I am in a financial hardship position. So what would you expect the IRS to be asking for if you're going to get an offer in compromise? They're going to want basically financial statements. Kind of their tax forms will basically be like a balance sheet and an income statement. What are your monthly income? What's your monthly expenses? What kind of assets do you have? Do you have a home? Do you drive a car? Do you drive a $100,000 car? Do you live in a very, big property or something like that? If you drive a $100,000 car, it seems like you could pay your tax bill. Maybe you should sell the car and give, you could see what the IRS is going to say on those kind of things. So you could see where it's kind of leading to. You're going to have to argue that you have you have a financial hardship and you're not going to be able to pay the tax bill. So that's a general concept of it. So keep that in mind, because if you do have a lot of assets, or if you do have income potential in the future substantial enough to pay the tax bill, it's going to be difficult to argue, that you got a financial hardship, or to the IRS that you're not going to be able to pay the taxes, and they're going to want not an offer in compromise in that case. Most likely they're going to want an installment agreement and say, yeah, that's okay, just you could pay us in installments and we'll charge you interest on it. And that's easy to set up typically. So in any case, the goal is a compromise that suits the best interests of both the taxpayer and the agency. When reviewing applications, the IRS considers the taxpayer's unique set of facts and any special circumstances affecting the taxpayer's ability to pay, as well as the taxpayer's income, expense, asset, equity. The booklet covers everything a taxpayer needs to know about submitting an offer in compromise, including who is eligible to submit an offer, how much it costs to apply, how the application process works. The booklet also includes the forms that taxpayers must complete as part of the offer in compromise process. The current application fee is $205. However, taxpayers who meet the definition of low-income taxpayer don't have to pay this fee. A new how-to video series on offer and compromise. The IRS recently launched a how-to video series. There's a link to that here on this valuable payment option for taxpayers. Playlists consist of easy-to-navigate information taxpayers need to know when considering and applying for an OIC and offer and compromise. Topics in this series include an overview of the OIC, offer and compromise process, forms, and pre-qualifier tool for help in getting started, step-by-step walkthrough of Forms 433, A and B OIC, which are known as collection information statements and needed for individual and business-related offers, a step-by-step example of how to complete the OIC application, Form 656, a final checklist to ensure everything needed is included to submit a valid offer.